pro forma financials are, let's just say, overly optimistic. Today, we're going to show you how we helped a private equity client save $6 million on a recent transaction just by calibrating pro forma financials using customer insights. Hi, I'm Anthony Barr.
And I'm John Ahn, and we're Strategex, a consulting firm that supports more than $1.4 billion in M&A transactions every year.
John, I like to say that pro formas are sort of like New Year resolutions, right? My New Year resolution is to read a book a week, right? It's well-intentioned, but sort of doomed from the start.
Well, speaking of things that are well-intentioned and doomed from the start, aren't you trying to read War and Peace this week?
400 pages to go with 1 day left, no problem.
I mean, good luck. But I mean, you're totally right. These inflated performers are a real challenge for investors because forward-looking financials, specifically free cash flow, are such an integral part of M&A valuation models, specifically the discounted cash flow model that a lot of our clients use. So here's an example of a company that was projecting 100,000% revenue increase over the next 4 years.
Yeah, that's right. You heard John right. We had to take a triple take at this when we first saw it, but they were expecting a $1 million to $1 billion top line over 4 years. Now, not saying that's impossible, right? But you probably have a better chance of making money by buying and holding GameStop. Now, admittedly, right, this is an extreme example, right?
Yeah, so here's a more common example of what we usually see, but even this is pretty aggressive given that historical CAGR is declining and the model here is showing 100% growth almost.
Yeah, it's like when you read 30 pages a day on average, and then overnight, your run rate increases to 400 pages and you finally finish War and Peace.
Well, speaking of Tolstoy, didn't he also say that time and patience are the greatest warriors?
Two luxuries that most investors don't have, right? They certainly don't have the patience to see a forecast like this actually pan out.
Right, but the point is that these pro forma financials tend to be grounded on some metrics and some degree of truth. So things like historical data, business cycles, market trends, they're all taken into consideration when we're making these projections. But one thing that we notice is critically missing from this element of making these projections is the most critical element in a business, something that actually generates revenue, the customers.
So here's a recent example of what John is referring to. We were conducting buy-side diligence on a target company that was expecting a 50% increase in revenue between 2020 and 2021. Now, our private equity client was rightfully skeptical, given that many of the end markets that this target company serves were really hit hard by COVID. So they wanted to pressure test these assumptions. So after conducting in-depth interviews with decision makers at each of the target company's top accounts, we heard a very, very different story. The target's top account, which was forecasted to increase their spend by nearly 50%, after speaking with the decision maker there, we learned that there would really be no material change in spend at all, right? For all intents and purposes, spend would be flat. Second largest account was forecasted to grow by 84%. When we spoke to two people there, both said that, yes, there would be an increase, but it was probably only going to be maybe 25, 30% bump at most. The real bright spot was account number 6, right? Management was expecting a 31% decline in spend, but when we spoke to decision makers at that account, we actually found that spend was likely to be relatively stable going forward. But given that the top 3 accounts were 60% of revenue, the impact that account number 6 had was pretty negligible.
Yeah, so armed with this knowledge, our private equity client was able to really calibrate and enhance their forward-looking financials and their overall valuation model to essentially result in a $6 million check size reduction that we talked about at the beginning. So when you invest in a company, you're not only investing in a company, you're really investing in the customer relationships that in turn generate things like revenue and profitability. And while pro forma financials are grounded in data, we sometimes forget to include the most critical element overall, and that is the voice of the customer.
Visit strategex.com to learn more, or reach out directly. And thanks for your time.